Sharon, and what should individual investors be doing with their money right now?
Well, Kelly, it seems this pandemic and the political fallout over what has happened at the U.S. Capitol cannot keep the stock market down. And in fact, some investors, particularly new investors, may be wondering how they can actually invest here with this disconnect as they're looking at their portfolios. For the most part, average investors appear to be following major market participants. About 68% of the stock market is made up of institutional investors, whether that's banks or institutional advisors or pension funds. And the rest is individual investors. And many of those investors are investing in target date funds or using robo-advisors. Now, Dan Egan, who's the director of behavioral finance at Betterment, says that may help take some of the emotions out of investing. And though you have to remember that before making an impulsive move, he says you should always be asking yourselves these questions.
Are you excited? Is your heart beating a little bit fast? Do you feel a little bit of adrenaline? Nobody makes good financial decisions in that setting. Nobody is going to make a smart long-term decision based upon short-term anxiety. So the first thing is almost a cooling off trigger to say, I'm really worried. I'm worried about this right now. I'm unlikely to make a smart decision for the next few years today.
Now, one of the things that you can do proactively right now, instead of trying to time when or to get in or out of the market, is to choose investments that are socially responsible investments. And in that way, Egan says you can have a portfolio that really reflects your own views and your own values. Kelly.
Shepard Smith here. Thanks for watching CNBC on YouTube.